Boys, what's going on, mate? Today's CPI from America, we are going to go through that. We're going to go through dollar pairs, yen pairs, gold pairs, whatever pairs you are looking into. Today, euro dollar has been falling. Today, pound dollar has been falling. Today, New Zealand dollar has been falling-ish. And I hope you guys are doing boom. Fantastic. Otto! Harold! Hello, is anyone in the car trade? Unemployment rate is imminent. Is in 2 seconds, I guess. 2 minutes, maybe. Yeah. Consumer price inflation in America is coming today. Good afternoon, Plata Leranzo is here today again. Da 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 da. Welcome very much. Skål. Hello, Cash. So, today, we are the champions. So, we are going to look into different markets. And what is most important thing is, markets expecting 8.3 out of the consumer price index. They're expecting 5.9 out of core, which is what we're going to look at. This one. Zoom. This one. Okay. So, we're going to look at, not that one. Look at this one. Hola! Hello, Mark. Hello, Aga. Hello, team. Hello, Princely. So, my name is Embidal, first rate of 8 years. That's what I'm going to do here. So, that's what I'm going to do today. So, today we'll leave the world behind, and dollar is raising every day. This is some part of what I was saying earlier, that this was rise by the end of the week, and we did it, so boom. Did we profit of it? Yeah. Can do better. Where is my... there we go. Fun. 1 minute left. Eso Ruiz. Hello again. Coffee? Anyone? Cheers. What is inflation gonna be? I'm just eating. That's what I'm doing. What can it be? Then I'm adding dollar here just to see. Is dollar going to fall? Is dollar going to rise? What is? So it is now. It is 15:30. Comes out. What is it? Come on! Yeah! 6%. Boom! Dollar strength. Dollar strength. So, sorry, neighbors. But yeah, that means dollars should rise. Dollar is rising. That is more than expected. 0.6 month of a month. Wow. 8.6. Boom. Ouch. Dang it. So, how do we trade? How do we trade CPI? Earlier today, I posted this trade here, for example. I said I should sell New Zealand. Well, you can't see that, can you? Sold at 64.26. If I can just find that dollar thing again, that would be profits. Come on, mate. 64.26. Oh, boom. Oh, yeah. Wait. Wait a minute. I'm going to shake my booty. You can't even see me, can you? Well, now. Maybe. No. Camera, please. Focus, please. Shake my booty. Oh, I can't even... I know how to do it. There we go. Anyways. What was it? Ian didn't want to see me twerk. I can't twerk, actually. So, won't see me that. But yeah. So... Go higher, coffee, please. Oh yeah. So, what is how is it going, mate? Becoming a billionaire by now. Oi, 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 oi. Even Australian dollar is falling. Oi, 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 euro dollar is falling. Oi, oi, pound dollar is falling. Let it rain, let it rain, let it rain, let it rain. Even Aussie yen is falling a bit. Even CAD yen, even New Zealand yen. Oi, 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 oi. Okay, I'm gonna start being serious now. Okay, so someone's called me. What did you call me, Josh? You called me not jovial. You called me something that that is pretty covering for what I am. I'm like I'm fun to be around, but not 0.01 lot zillions. I don't have 0.01 lot size, so I'm gonna have more than that. I'm gonna have billions. I'm gonna have trillions of because I have more than 0.01. So, anyways, let's go through it. Dollar is rapidly rising. Yeah, that is actually quite true. The S&P is currently falling even more, even harder. Aussie dollar is making a new lower low, as you can see here. Yesterday we said 72.20. The Jolly Trader Mason says, "What? I had a sell order on New Zealand dollar at 36. It didn't trigger 2 pips away. I think, mate, you were a bit too aggressive there on that trade. So, like too conservative. Sorry, not too aggressive. Too conservative on that. Sorry, mate. Sorry. So, Charlie Trader should probably be a covering, covering there. Also, Canadian dollar employment below expectations. Wrong there. Below expectations. That makes pound CAD fall. Let's look at that one. 5.1 better than expected. Participation rate is same as expected. Net change in employment is way higher than expected. And our average hourly wages is at 4.5. Wow. Okay, so good. So you can do that one, and we can put that one back there, and then we can just take that other one away, and I can't find it anymore. There it is. So there we go. So pound CAD. Where are we? Yeah, even that one is falling, mate. Well, congratulations, then. Anyone who caught the move? No, I had my own titles and other things. Shee! Dollar in Nasdaq is melting, so I'm happy for you, Mister Pound Cat. I'm not saying you should take your profit and move, but it might be one. Euro New Zealand is melting pretty hard today. I would say this should be a level to consider to buy. I'm not saying you should buy it, but yeah, okay. Because New Zealand dollar has a pullback. Ouch, it has a pullback. Kirkland says cats we see. We can do that later. So Australian dollar. Also, what else? I can't remember what I said in the stream yesterday. Yeah, probably said 71.50, didn't I? Yeah, I said that. So, okay. So I went off from Central. Okay, fair enough. If you took that one, that would be profit now. Euro dollar didn't hit the sell price yesterday, and I said I won't trade it, so don't worry. New Zealand dollar came up to M3.5. That was a sell that was published to everyone as well. So hope you guys caught that one. Other than that, hoping this one to still continue to make a lower low and then come back later. We also have an attack at 64.40 and 64.70 or 80, and stop loss at 64.90 for some of it. Robert says, how we know the inflation rate? Yes, we do. Today we do. We are, what was it? I'm just going to double check so I don't say it wrongly. But it is. There it is. So the core is 6%, and what the news wants to use, but the Fed doesn't, is 8.6. So core is 6%, and normal inflation CPI is core CPI more than anything else. Core CPI is what the Fed uses, and CPI is what the media is using, and that is at 8.6. Hello. Hello, Samson. Are you doing well? Nice tie, by the way, mate. Core CPI 6%, and CPI year over year is 8.6, and core CPI month over month is 0.6. So that's an incredibly strong month. If you're looking at the data points there, just to give you guys a brief introduction there, if you see like 0.6 isn't the highest one, but it's still way above what's normal. Normal is like between 0.2, 0.4, down to -1. So month over month 0.6 is definitely spicy. Okay, market pulling back, giving you a second chance more than anything else. We went down to 105.60 on the euro there. I also want us to set up next week, so if we can get a pullback, that'd probably be great. But other than that, we have hit target on S2 at the late week. Can maybe say you should look for a central pivot next on Monday and then down again. But what I would say first and foremost, plan A would be this one to just continue lower. Continue to build the strength. If then it then continues back up again, then you can take that one further down. But other than that, right now in euro, it makes a no low, and so far so good, I would say. So far so good. So I'm just going to update our trade on New Zealand. How much are we in gains there? Let's say, when do we 64.22? I think it was something like that. So currently we are 20 and we were 50 pips in profit. So gonna make a banner on that one. Create a banner. Trading is risky. More anything else. Sold. Let's say sold New Zealand dollar, US dollar. Find it. Where is it? At 62.60. At 0.6422. Currently 15 pips in profit. I think it is something like that. Thunder. I was at least. Now it's more like, yeah, give or take. So, life is life, I guess. Can win them all. Yeah, more like 13 now. But okay. Get ready for 75 basis points in June. That's kind of the next thought process we have to do is what is the implications of this? 50 basis points is definitely in it. Traders price 3.5 points over June, July, and September. US interest rate further price about 15 basis points in cumulative rate hikes in 2022. Fed funds rate at 2.985 at the end of December. We can also go over to the CME group to check that one out. Trade of the day in hindsight was pound yen short. Yeah, actually, it has a lot of pips. Actually, it doesn't show that one actually, but sure, that's a good 80 pips there at least, minimally. So by the end of the year, 14th of December, market is pricing in a 27 270 to 300 basis points by the end of the year. Currently, we are at 75. That would mean 2% up to 220. That means 2% up or 200 basis points up by the end of the year. So you have June, July, September, November, December. So if we take 200 and divide that by 5, 200 divided by 5, that's probably 4 or something. 40 basis points on average. That means averagely at least 50, 50, and then 50, 50, and then one in December that might be 25. That dollar ton of bricks is bouncing back. Got a short on pound yen, says Rafael. Yeah, 180 pips so far. Yeah, cool. Good on you, mate. Good on you, mate. Happy for you. Aussie yen, also another one that was that's making a new low, having a pullback. That's 47 pips. New Zealand yen, another one that made a low to 59, but currently at 35 pips. NOK yen is also falling. USD yen. So what would you guys do here though? Would you sell or buy, or what's the deal here? So would the inflation being so high, shouldn't this one go further? Now the question is that we saw earlier today from the Bank of Japan, if I can remember where I saw it here. It was this morning. It was this morning. When is this morning? So JPY. Japan top currency diplomat says authorities will take appropriate actions if needed. They also saw earlier Japan financial authorities express concerns of rapid yen weakness. I think that is definitely a concern for the market that they are expressing, that might lead to dollar or yen bullishness. So if you trade yen bullishness and dollar bullishness, you might not get anything at all. But if you trade Aussie yen instead, or CAD yen, Euro yen instead, that would be a much better deal. Strength and weakness and all of that. As USCPI will be getting higher, DXY will lose its strength. So that's an interesting point, but I would still disagree so far. The reason for that is, as long as we have higher inflation than projected, we still have more legs to go on dollar. But as the day inflation stops rising and it flattens out or anything like that, dollar will weaken, because market has priced in so much inflation, so much interest rate hikes, that it has kind of peaked itself. Okay, so that's that. Mr. James says he bought gold. Okay, not really happy about that, James. But you make your own decisions. But I said yesterday in daily setups that we don't buy gold, but that is okay. Another thing on gold is here is also having has a big fall, though it's coming back up again against the dollar strength, and people now seeing that this is going to turn into more of a risk event, and we might see that this will lead to stagflation. But so far we are not there. It's still just what the market is pricing in some of the back of their minds and thinking about that might happen. Okay. So, what else? I was supposed to do one more trade used in NOK, pound, euro, CAD. Which one is it? Pound CAD. Okay, pound Aussie. Okay, so I can't remember which one I was supposed to, was one of those commodities that I was thinking about, but I can't remember right now. The excitable man says, "Rock on!" All right, I will do so. So, S&P 500. Why is it falling? Why is inflation making stock market fall? Can anybody tell me? At all, whatsoever. Just falling that this chair is falling down more than faster than a leaf can fall off a tree. But yeah, I need to get a new gas pump. I know what's wrong with it. It ain't no gas in it. So anyone? Why is S&P falling? Why is US 30 falling? Leveraged companies will spend more servicing their debt. Equals equal what? Equal I can't remember my brain. Equal less profits. That is okay. That's okay. That is an okay assumption. Is there any other assumptions out there? Is there any other assumptions, let's say? They expect more hawkish Fed. Okay, those are two very good reasons. You guys are let's see. Harold always expressed me besides emphasis, of course. Yeah. Now, as I should be the one that always impresses you always. Interest rate and dollar strength. Okay. That's why the stock market is falling. I would disagree on the dollar strength, but okay, that can be okay as well. Expect more hawkishness from Fed. Yeah, okay. So the reason that I would say is definitely Harold is 10 out of 10. Ding 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 ding. That's a good reason. The other one is higher financing costs and maybe less profits because people have less money to spend, so less demand for their products. And another one that is also equally important is inflation too high? Therefore, the cost of operation of inputs is so high. Yeah, that is kind of what is that all about. Shaikh says, what if you're natural gas? Should you hold or close you bought at 9.2? I have a do not trade sign on nat gas at this moment. It is too volatile up and down. It is difficult to make profits and it's difficult to make a sensible move out of it. So if you should close, that's totally up to you. But in my class, in my view, you have a no trade zone there. So make appropriate adjustments. Okay, so the stock market will then fall. Just going to make sure we still have profits. The stock market will then fall before a rebound later on. Okay, so it is great that it falls because that means we can get it. I don't know why. We can get it at a discount later on. So far so good, at least. Do we have the, let's see, Tradingview stock market heat map? I think maybe it is something like that. Scusi, there it is. Yeah. What is the stock market doing today? Microsoft is down 2%, Google down 2%, Amazon is down 4%. And as you can see, generally across the board on almost any sector, actually, everything is red. Except for Home Depot and Costco. So retail is still doing better than anything else, but as you can see, technology, Apple, everyone is down at least a digit or more. And also looking into transportation, UPS is down, and consumer is also down. So it's a very red day on the stock market generally, but as you can see, the big ones here coming in at Apple, coming in at Amazon, coming in at Google, Alphabet is really dragging the market down. And even Intel is down almost 3% this morning. So what does this tell you about? This tells you that overall most of the market are going to be more hurt now, especially if you have services or goods that is towards that needs an input and has an output. Oh, look at Netflix. Oh, look at Netflix, down almost 5% this morning. Wow. Okay. I'm glad I didn't buy that one then, mate. Look at this fall. Look at this fall on Netflix. It's absolutely being crushed more than anything else. And the reason is because they're going to have less. They're going to have less consumers. Also, less people are going to buy their stuff. So basically, not a really great day to be a trader on the stock market, but equally better to be a forex trader because we are in profit in most of the things we are doing today across the board. Yeah. We are definitely in profit across the board today. Nothing has been hitting stop losses. Ooh. I love it. I love it. I love it. So yesterday I made a trade plan that I'm going to sell 86 and 86 40 level ish, 30 level and 86. And guess who is having profitable trading plans? So how can you profit from this move now? The question is here, mate, get your entry to break even and better. Make sure you have everything covered in terms of if this now turns around and starts going back up again, you are not damaged on your account more than anything else. Okay, you need to make sure that you are covering your bases left and right on your trades, now that you're in profit, more than anything else, to be honest. So make sure, I'm just going to say that again, just make sure that you don't lose money. That's the whole reason why I'm here. More than anything else. So good jokes on that. What is a sensible TP for GJ? Good question, Rafael. I would even say Jesus take the wheel here. Also, where's the bottom? Oi. Tja. Also, hold on. and see where we go. Well, I can give you a couple of pinpoints, but we are all too extended on anything and everything here. Also, pinpoints, it doesn't even work at this point. Just gonna be unbiased. So, yeah, 163 back to M3. So far you have supported 165, and then you have supported 163. Those are kind of two things that I see immediately. But more than anything else, I would say bearish bias next week, and that would tell you 161. I don't know if that is even a reasonable place to take, because we are so extended from this week that this next week's pivot will be like massive. Okay, so I would even say maybe let's go over to Season X just for the fun of it. Can we get a bottom on the Season X? Pound yen, please. Please. There we go. Oh, you're beautiful, eh? So June should peak around 6th. We are on 10th now. And should be around 7th. Sorry, 9th of July. So generally speaking, it's a 70% return there. I would probably just at least take it until 27th. So that's a 90% there. So up until 27th, as long as you still have bearish trend, you still are below 167. And yeah, so there's no sensible target other than 160, 165, 160, 163, and then we'll see. What does it take to become as awesome as I am? First of all, second of all, third of all, you need to lose. You need to make mistakes. You need to learn from your mistakes. You need to have such a big trading account that you can make mistakes and still survive. And I think that is actually a correct one. Coffee. My coffee ended. I don't have anyone else to do coffee for me. So can someone send me a coffee from like Java or something, so it can be delivered here soon, so I don't need to move my bottom. But yeah, my coffee ended. But yeah. So what was it? Was it a raw file? No, it wasn't Rafael. It was Marco. I think Marco made a. What did Marco? Marco bought a copy yesterday. So thank you very much. That's my second sale ever in my on my stream. No, sorry, on my store. The other one was a T-shirt to Harold, like back in 2010. But yeah, yeah. The humor part is a bit difficult, Mark, because you need to be as funny as I am. It's very difficult. I think you need to. I think the answer to that is, one, you need to be patient. You need to develop a strategy. You need to develop a strategy that you trust and believe. That means backtesting. That means really putting it to the test. You also need to be understanding the market. You need to read a lot. You need to get a couple punches by the market in your face, and you probably need to make a couple of 100 mistakes. But when you make mistakes, which kind of makes, I guess, me better than myself, is I write down my mistakes. I don't do them again. Don't do a mistake twice. Okay? Don't make a mistake twice. That is one thing else. DXY just reached 104. Oh, yeps. Oh, yeps. There we are. There we are. There we are. Going well. Going well. This almost sets up a bearish trend there. Euro dollar. Wow. Ooh-wee. What is that in a day? 170. No, it's more than that. It's 100 and. Wait a minute. Wait a minute. Wait a minute. Wait a minute. Do we have a winner chicken dinner on the monthly? Oh, we don't yet. Oh, okay. We don't yet. Okay. I almost thought there that what was it? Who was it? That Mr. Charlie. I'm just gonna call him Charlie. Charlie sold 107 level here ish, and is still holding. Oh, and I just love when people come around in my mentorship. That is my social proof. I know he never sees the stream anyways. I can just brag about him anyways. So if you ever see this stream, Charlie, you're welcome. But I'm so proud of you. Turning around from not having clear rules at all, and now having done a lot of back testing, a lot of seasonality testing, and now has a clear as a bird outlook. And just look at that trade. Just look at that trade. I'd like to remind Westpac upper range on DXY is 105. Well, we still have a move down though, but what else is important that we are currently going to look into is we have passed the weekly target so far that we might have a bigger pullback now. Just in mind, just have that in mind. So if you want to take profit on a euro, some small part of the profit, you're welcome. You're welcome. You're right, Joe Balls. My TP at 103.6 was premature. Yeah, we didn't laugh over you, Harold. We were like, yeah, we just disagreed with you, Harold, right? In it. Do you have a cure for the treatment for premature profit taking? Hashtag suitcase. I don't know. Maybe some. I can't get out of that suitcase. Joe, help me so I don't give a bad answer. The only answer I can give you right now, Harold, is try some early, not early retirement. No, what do you call it? I don't want to say that. Some dry humping. Do you have any idea of TP on New Zealand dollar? I think it was 0.6320 area. So give or take. Weekly bearish is way lower than, but yeah, 0.6320. Somewhere around there. I don't know. NSW, Harold. NSW. Maybe S. Maybe that's how you're supposed to say it. Today, CPI has been coming in at 8.6 or core 6%. Month over month is 0.6. Still a very strong CPI. Market is now forecasting another 2% increase of rate hike. That means 50 basis point rate hikes for the next at least 4 meetings, or one that gives off 0.75 more than anything else. And Harold is laughing. Yesterday we had a good meeting about pivot points, and is Pound Yen giving you a pullback here, people? Ooh, okay. Okay. Is Aussie Yen also giving you a pullback? Okay, that's all right, mate. That's all right. So, what do we do now on New Zealand Yen? I'm just going to take away Harold's laughing. What are we going to do now? What is the what's the medicine, mate? Doctor. So we're going to do one thing here. EMA, just for the fun of it, is showing that this was the strong move. We are coming down now to 200 EMA. we are now seeing a shift in momentum, maybe to the downside. You have a couple of options still. You have still 86. You have 86.30, 86 flat. What about selling 85.70? Good. As well, giving it a pullback. Yeah. So you can sell it again. So where do you think this one should fall? Should we do number 1, number 2, number 3? I'm gonna give that 1, 2, 3, and I'm gonna give it a poll. So we can find a poll station. There we go. Which option? Where should we sell New Zealand yen? That is, will be, oops, that was my milkies. Number 3. Can you look at gold, please? Yes, we can. As you guys are going to put your votes into New Zealand yen, we all understand that is number 1, that is number 2, that is number 3. I think that's pretty straightforward. Nothing else. You guys are giving your votes. 4 votes are being given. We can go into gold in the meantime. Okay, so what do you mean, Sunny? What do you want? What do you want? What about gold? What about it? Do you want to buy? Do you want to sell? What's the deal, mate? Where's your direction? I don't have any direction here, so you tell me. You are the expert, right? You are buying, okay? I would strongly disagree with you to buy. I would strongly disagree with you doing anything here. We have entered a range. We are at support, but we are finding lower lows, and we don't have a higher high. You do not have confirmation to be buying gold. So if you're in my firm, which I always assume you are until I kick you out, that if you bought gold there, I will be giving you a time off today. That is not where you make money on gold. It's not bad. It's just you're a bit too hot. It's a bit too early. That's all. I would sell New Zealand yen next week. Central pivot option number 1. Okay. So the thing is, Sonny, I want you to succeed. I want everyone to succeed here. So if I was to put a succession here, I wouldn't take that trade myself. So therefore, you should not as well do. But your money, your choices, not mine. But it is too aggressive because you are looking at that at this point. Doesn't matter, mate. Doesn't matter, mate. If you make money there, okay, cool. Have a fun life there. But my point is, what if, which it should have done, what if it went to 18 or 105? Are you still holding? And if this now rolls over, you can surely take profit and everything. But if this now rolls over, you look like, yeah. So no, also my opinion there is, I'm just going to leave it that. My opinion is, I would not allow you to use my money to enter that trade in my firm. That's how I'm going to explain. That's how I am going to. That's how I'm going to answer that. Okay, buy entry on FXCM. Okay, fair enough. Don't care too much. Coming into to July, June, and everything, we are supposed to be peaking soon and make a bottom around 20th of June. If you start buying 20th of June, I can surely, we can discuss it then. One thing else, that's what we can do. Okay, so New Zealand yen. Most of you guys says number 1. Okay, most of you guys say number 1. So we will then put a limit order at around central pivot. Yeah, what is the central pivot? Is at around 85.73. Around 85.73. That would probably be okay. But it's kind of up to the market. Whoops, wrong. Is that job one? Okay. Other than that, nothing else that I would like to see or do here. Sorry, that was gold. I was thinking about gold. I talked about gold, and then looking at this New Zealand yen I'm talking about. Sorry. So, is that what most of you guys are looking into? Selling New Zealand yen at number 1 at 85.73. That's a good 30 pips up from now. Okay, let's see then. Let's see. Just going to end the poll. The next thing that I also want to mention here today is USD CAD. Holy schnickers. Oh my bottomist. That trade, Mr. Joe, I want you to explain yourself on that one. Because that is, I don't know how much, how little, but I know you bought yesterday before all of these things, and that has just been a rocket ship out of this world. 200 pips in 2 days. So the question is, how on earth, mister, did you do that?
First off, mic test. Can you hear me?
Yes, I can hear.
All right, good. Seasonality. I already had a plan for this 2 weeks ago. I knew what I was doing exactly. Yeah. I mean, did I expect this to happen? Exactly. No, you can never plan for this, but you're happy. See, I was trying to short euro dollar, but it was just so choppy. I ended up day trading it that one time for 50 pips, right? The other day, earlier this week. And in that stream, I said, I'm taking some day trades and whatnot. And then as we got around here to Wednesday, I was like, oh, this dollar CAD has not just really good seasonality now, but you have 2 really huge catalysts coming up for it. I might want to sit in these for a moment. And you can only take advantage of these sorts of moves if you're already in the position. And you can only get into these positions if you already have a plan. And you can't have plans for trading unless you actually look at your charts and look at your data and you have to go out of your way to actually make your trade plan. Now, we have plenty of viewers who will go out and go to their charts right now and start trying to figure out what trade plan they're going to do. But that's not really trade planning. You need data and you need a bias and you need, research.
That's trade chasing.
Yeah, you don't want to be chasing. Yeah, buying now or something. I mean, at this point, there's a lot of there's more uncertainty as to where this thing's going to top out right now.
Can you share your screen?
Yeah, just one moment. I got a lot of my I've been making a lot of progress on the new version of Wayne's Pivots Pro. So all my windows open right now are all Wayne's Pivots Pro stuff.
Confidential data, right?
Oh yeah, it's all proprietary stuff. I mean, it's not necessarily like crazy code. It's just a lot of code. It's a lot of code and a lot of work, and I don't want other people copying it.
Yeah, because there might be people in here that is
Oh,
stealing our work.
oh, you know,
Well,
it takes,
just
you know,
gonna mess around.
also, by the way, if I ever leaked a screen of my code, I would never be fearful for, the integrity of it, because my scripts are like thousands and thousands of lines of code. So even if you were to only look at like 1 or 200 lines, it's
Yeah.
all right. Let me share my screen. It was just I had to get set up here. Let's see, share screen, and I believe that's the correct one. All right, that should be it. All righty. So let me hide this and bring up this. So it's kind of interesting. One of the reasons why I'm swinging this trade here, if I go ahead and just hide some of these things. Let's see here. I want that. I want that. I don't want that. I don't need that. I just need this column here. So this is a different type of seasonal measure. This is my own indicator, and it tracks the seasonality of the expected value for a given day. So you're taking your probability of getting a bullish day, multiplying that by the average gain you get from bullish days, and then adding that to your odds of getting a bearish day times your average bearish day gain. So combining those two, you get your expected value. So poker players, professional poker players, this is how they think about their hand. This is what turns someone who's an amateur into an actual professional trader. Once they're able to correctly start assessing expected value in their head. So expected value is a very important concept when it comes down to, games that involve probability. So in what's really kind of identifiable here is this day, this bright green row right here. Right now it says we're in the 8th trading day of the month. And this is saying on the 10th trading day of the month of June, we get our most positive expected value trading day. Mm-hmm. So I was looking at this trade over here. So 3 days ago here on the 5th. And I saw, hey, we kind of go from negative expected value to positive expected value. That kind of sets you up seasonally for a swing trade. So I've been sitting in this trade now for like 5 days, and I'll probably sit in it until Wednesday next week.
Still, I thought you hit your target earlier today.
Oh yeah, that was my first target, and then I realized this is really going far very fast. And
okay.
See, there's another indicator on here other than the pivots. It's this right here. This is something I've called the boss bands, but this sort of strategy has been around for a while. This is just my flavor of it. So that's why I call it boss bands. This strategy was actually, I learned it from the current head of FX trading at Edmund de Rothschild. Yeah. He used to trade this back in 2000 for like 4 or 5 years. At least I think, based off the information that I have. And this is it's a approach to trading Bollinger Bands that gives you trend trading and reversal rules. Now, what we have right now is what I call an edge-to-edge trade. this little blue cloud right here, when this thing here, this is your signal cloud or signal line. When this is between your bullish cloud and your bearish cloud, it sets up range trading opportunities. So that was the buy on this signal, and up here is your sell. So this is like 129.
Mm.
So that's, now I'll tell you right now, is this perfect? No, it's, it's a very much a traditional sort of TA approach. But when I first started trading and making systems and building indicators, I don't know what it is, but I don't know. I have a good gut feeling when I use this, and I understand the parameters of this indicator very, very well. So I have a good risk assessment whenever I'm taking trades with this.
Mm.
Yeah.
What is your entry on USDCAD?
My entry on USDCAD here, let me check. I mean, I have two trades here. One that's really that was on the 5th day, and one that I entered a little later. Let me go ahead and load in on my phone here. Let's see. 25.97 is the higher one. 25.96. Yeah, right around there. And then 25.35. So let me do a horizontal line here for 25.35. 1.2535.
I would probably be.
That's right there at the bottom.
97.
Yeah, this. Here, I'll go ahead and make it like dotted and.
181 pips at the moment.
Yeah, I mean, I literally caught the bottom there. Now, the only reason I took this trade was because of the seasonality dashboard.
Yeah.
This seasonality dashboard was saying, hey, on the 5th trading day of the month, right here, your expected value starts to increase. Your likelihood of, historically, based off the data we got, your expected value goes from negative to positive. So what I like to do is on the day when the rotation occurs, at the end of that day, I will take my trade. So my trade was end of day here, open of this day here, take my trade. And that's exactly what I did.
Mm-hmm.
Yeah. And my plan will be end of day on the 10th, open of the 11th to get out.
So Monday?
Yeah, Monday, Tuesday.
Give or take.
Oh yeah. I mean, you can always get crazy news that comes in, right? I mean, you have to be nimble, right? If you're not willing to be flexible, because the future is quite uncertain. You can make trade plans as well as you can, but the whole purpose you're never going to be able to totally forecast everything perfectly. The whole point of a trade plan, the real purpose of a trade plan is for risk management. If you're not doing risk management, you're not really making trade plans. I mean, there's also another situation where you are doing your risk management and then you're not you just have no clue what you're doing. You're just looking at the chart, taking whatever wild interpretation you can off the price action and trading that. Not a good one. It's far, far, far more productive to read some research from some trading institutions, to listen to commentary from guys like us, and to learn as much as you can about the thing that you're trading. Oh man, yeah.
My brain just zoned out. Sorry. Um, Emma, sorry.
Yeah, I was wondering if anyone had any more any questions, at least on the trade
Well,
and whatnot,
I
or
think
maybe
I
on
think
something
what they
else.
want to see more than anything else is that you pass by, wake up a bit earlier every day, so that you can be on these streams and explain, not explain it, but use in practice and yeah, generally show over time how it plays out. So today it's congratulations on that one, um, and then see how things go. Also, and then I know questions will come when people are getting more and more into it and stuff like that. So Joe, are you read the question? I can't.
Yeah. To Mello, I went to school for statistics, but I had to actually drop out of college once COVID came around, and ever since then I haven't been able to go back. So I plan to still go back to college and eventually get a master's in stats, but for now, um, I'm still reading all the statistics books that I should be reading in college. I just don't have the degree right now.
Hmm.
So I can't
But
necessarily call myself a statistician, but do I practice statistics? Am I cautious and picky with the words I choose to be statistically correct, right? Like, for example, you don't hear me say, "Oh, the odds of my indicator." I say the historical odds of my indicator, right? Because I'm not predicting the future, right? So I just, yeah, you could say I'm a statistician to, an extent, right? Limited, right? Amateur. Yeah, I mean, I think amateur would be the appropriate term until I can graduate.
yeah. So most of what you do generally is based upon statistics.
Yeah, and some of it's pretty. It's
And
funny
then
that I call
coding.
myself an amateur statistician and I'm trying to make my own meta log distributions.
Yeah. And using quant and all that. But
Yeah,
yeah.
try and get data for your trades and data for your strategies. And
Yeah.
the more you got, the more likely you are to have things work out. It gives you confidence.
Yeah. Just flipping the screen here for 2 seconds. It's stock market is generally pretty red today. Visa down 3.4. Microsoft Apple still very red day as the CPI came out today at 8 and core 6 point, was it 6.1 6 which sends the market into almost like a battle of how high can we really anticipate the interest rate to be in America up for the upcoming future. But we have, at least so far today, so far pricing in a 2% rate hike by the end of the year. That means a double rate hike for the next 4 meetings, and now we are looking into 3. So that is now 5 meetings, all having double rate hikes or double the normal rate. So really aggressive. For one, pricing in of the market. Two, expectations to the Fed. We have FOMC on Wednesday. What is your expectation for FOMC on Wednesday?
That they'll do a 50 basis point hike.
And
It's
that
pretty
they're
straightforward.
going to,
They'll do a 50 basis point hike, right?
yeah. They're going to do a 50 basis point rate hike. And what do you think they will say about the future interest rates and what they might think about inflation at the moment? which we came out today?
So when it comes down to interest rates, when it comes to FX trading, two major things. Well, technically three, but that the third thing's a little more immediate. So there's two major things when it comes down to future FX rates. It's the terminal rate, and I'll define that in just a moment. There's the terminal rate, and then there's rate differentials. So rate differentials are carry trade, right? Japan has 0 rate, Australia has 1%. Trade differential is the carry. You get that 1% annualized, and then per trading day you get a payout of that annualized. That's your swap.
In very short, in very clear words, you get paid the difference between the two interest rate in two different countries you are trading. So if you are, for example, now buying dollar yen, you're getting paid to hold it, and you're getting paid to hold the dollar because dollar has a much higher interest rate than Japan at this point.
Yeah. And then the terminal rate is simply where do you think central banks will stop hiking rates? So the current forecast for the FOMC's terminal rate is 3.5 to 3.75 or 3.75%. And that terminal rate is expected in the third quarter, second quarter of 2023. So a year from now. The other thing is before last week, there were a few banks that were actually expecting a few rate cuts in the third and the fourth quarter of 2023 and in the first half of 2024. Now, the rate cuts in 2024 first half still exist and are still forecasted, but not in the second half of 2023 anymore. What's expected now is in the second half of 2023, rates are going to try and be as stable and as flat as possible. Because it's at some point in the first half of 2024 that unemployment is forecasted to start rising again.
Yeah.
So we're positioned right now for a recession in economic growth around the world, and central banks will keep hiking until they see unemployment rise. Now, I think it's kind of important to bring this forecast that's all the way out, like 2 years out, into mind, because the trigger for those interest rate cuts or to stop hiking, the trigger for that is rising unemployment. So there are people now calling for recession, depression. If you see in the future economic growth slow down to it at a really fast rate sometime in the third or fourth quarter of this year for whatever reason, and then you start hearing reasonable forecasts of unemployment spiking, you can probably expect central banks to be a little more cautious with their rate hikes and to allow growth some room to rebound. And in those cases, you'd probably want to be short dollar and short yen, whereas in the regime we're currently in, we want to be long dollar, long yen. And I'm talking about a quarter over quarter basis, not on a month to month, day to day basis. You can always find situations where you can be long and short dollar and yen, risk on, risk off, day to day, week to week. But when you're talking about these macro research themes, you really want to look at it on at least a month to month, preferably quarter to quarter basis, so that you get ideal targets, right? What's the expected low for kind of this part of the cycle? Yeah. So we need to be very, very cautious going forward about anything that has anything to do with unemployment.
Have you ever considered doing a video on the indicators you use, or is it still too much work in progress?
Well, I'm just a one man show, right? Ivan, you've done videos on my indicators, and you've you see that even just with one video, you can't cover everything.
Hmm.
I mean, I literally was writing a book on how to trade the pivot point indicator that I made because I've done so
Hmm.
much research now on pivot points and pivot point trading rules that it's totally insane the amount of strategies and the triggers for those strategies.
Hmm.
Like there's just so much there's a lot you can do with pivot points with discretionary technical trading.
Hmm.
So my whole focus right now is just doing research on which of those strategies actually work and have some at least historical data backing them that they work.
Hmm.
Um because so one of the reasons why I haven't like just gone in and focused on videos is because yes, a lot of my stuff is still quote unquote in development, but with what you can get with it right now, it's really just for advanced pivot point users.
Hmm.
And frankly, guys who want to do more professional trading, if you're spending all day, every day looking at charts, you any sort of historical seasonal data you can collect is really, really important. So I've been catering my development to building those tools to just like absolute huge, huge standards.
Hmm.
Once, it's going to take me a while, but once those
Hmm.
are all done, I don't even think I'll need to make the video. I think I think by the point these indicators are fully fleshed out, I would have taught people one on one talk, with you and with anyone who gets these indicators. You can always
Hmm.
ask me what it is you want to learn about the indicator, and
Hmm.
I'll walk you through on it. It doesn't take a long time. It takes maybe a couple hours, but um, you know, you can learn how to use all these fancy indicators that I have in a day. And
Yeah.
I can teach a lot of very advanced pivot point trading strategies really damn quick. And that's what the guys in your private trading group are getting right now.
Hmm. That was yesterday.
Yeah.
So Harold says I did stats at college 3 decades ago, and Joe has way better stats brain that I ever had, ever could be.
I
That's a good one,
appreciate it,
actually.
Harold. Oh my God.
Well, it has some natural. It has some natural ability to it, more, or some natural um, necessities or requirements to understand stats. It's not straightforward for everyone here, myself included. Um, it wasn't the funnest thing to do in uni. Is USD Swiss the same situation as USD CAD?
Pull up my chart. I went ahead and
Yeah.
read that, and I went and I switched my chart over to USD Swiss franc. And the most bullish trading day by expected value seasonally in June was 2 days ago, which was this
Mm,
trading day here. So it's quite unusual that the current trading day is so bullish. Most of your highs for the month come in right about now on average. This orange dotted line is called the probability weighted pivot. Um, I'm very happy about this because this is actually something totally unique that I've made. Pivot probabilities is a really cool historical analysis tool for pivot point trading.
mm,
So here's USD Swiss franc. And if I go ahead and I just set up a 2x2 window here, hide that, let's go ahead and apply these indicators to the entire layout. And then go to USD CAD. And also let's throw momentum on there. Let's hide this. That kind of gets in the way. All right. And let's hide all the drawings. So here are the two charts side by side.
Thank you very much, Peter, for the for the €1. Thank you very much. That is
Thanks for the
absolutely
tip. Yeah.
not necessity, but wow, that does not come often. And those who does, they get an extra star in my book. Well, there are a few of them. So whenever that happens, I'm deeply appreciative. You really don't have to do it, but it's definitely welcomed if you choose to do so, but nobody needs to. But yeah, thank you very much.
So as far as USD Swiss franc to USD CAD, USD Swiss franc has been stronger for longer, right?
Yeah.
You can see in the momentum indicator here called the M oscillator. This was developed by a guy named Mohammed Afazi, who's managed a multi-billion-dollar portfolio out of a bank in Saudi Arabia. I forget what the name of the bank is, but the guy's name is Mohammed Afazi. You can look him up. He's a CFA. And he used this indicator for like 5 years to manage some pretty serious funds. And indicator's totally free. M oscillator. I like it because it typically gives a signal consistently one candle before MACD. But if you don't know how to trade a range bound oscillator, I wouldn't bother. I'd stick with MACD. MACD is more user friendly for newer guys. Anyways, if you look at these two, you see that the chart on the left, we started getting our bullish signal here on June 1st. Here on the right, we got our bullish signal on June 9th. So the momentum in Swiss franc is further down the line. It's more mature than USD CAD. So USD CAD potentially can still get a little bit more momentum. There's still room here in the oscillator for it to go to zero. And this looks like the momentum over here is speeding up. And this looks like the momentum over here is possibly preparing to go into either a trending state above the 10 level here, or it's probably going to keel over in the next few days. If I recall correctly, if I look at the seasonality here by expected value, there's one more really positive expected value day on Monday next week. That's probably when, well, actually, probably on the 11th or the 12th. These are two positive expected value days. They're just not super positive. I would just want to be out of my bullish trades by the end of day of the 12th trading day. So if this is Monday, that's Tuesday, that's Thursday. So I'd want to be out of this thing by Thursday next week.
Oh.
And be short at end of day Thursday. So then I can take advantage of this trading day here. So next Friday on USD Swiss franc, notice how now we're not talking about today Friday. We're talking about next week Friday.
So still has room to go higher.
Yeah, I mean, how do you think I knew what I was going to do with USD CAD in that trade? This is how I knew what I was going to do with USD CAD. Here's what I'm saying. This can be pretty straightforward. Now, this is seasonality. This is historical data. So is your hit rate 100% on this?
Nope.
No. I mean, your hit rate is never going to be 100% on pretty much anything that's legit.
Anything that
Let's
is
see.
not.
So yeah, that would be how I approach USD Swiss franc over the next week. And when it comes down to USD CAD, I'm just going to take this thing till it goes above H1 here, or rather, the price of 128.6.
126.
Mm-hmm.
Okay. Sheldon asks, Ivan and Joe, USD CAD and USD SAR looks almost identical right now. Does this have any correlation to one another, USD CAD and USD SAR?
Well, you can answer that pretty quickly if I go ahead and just hide
First of all,
this.
it's USD. Second of all, CAD goes opposite of dollar whenever also whenever this risk on, dollar goes lower, CAD goes higher. On the same move, generally SAR also goes opposite of a dollar. So it can be looked at as a risk off currency, but it's the currency that is mostly, or you can use it as the indicator for emerging markets, and how emerging markets really do. So emerging markets does really poorly when USA, for example, is raising interest rates, because emerging markets has a lot of loans in dollars, and a lot of trade goes to emerging markets slash Africa, whenever whenever there is economic growth, and right now we have too much of it. So dollar and SAR should generally go opposite. USD and CAD should generally go opposite. That's why you might feel that there is a correlation, but CAD and SAR in itself doesn't correlate to each other, because they're not driven by the same, not entirely all 100% the same drivers.
Yeah, that's absolutely right. You're not going to get the same drivers. I mean, it's just different currencies being quoted against dollar, right? So you have to look at the charts and see what is the dollar's effect on this chart and what is going to be based off, either ZAR or CAD in these examples. Over here on the left chart, I brought up correlation coefficient, and it draws a pretty clear picture of how you would have seen the rolling, I believe it is 20 period correlation.
Mm-hmm.
Yeah. So it's correlation over the last 20 days between USD ZAR and USD CAD here. Let's do open eye, look close. There we go. So the correlation's significantly positive right now, and it's been significantly positive ever since April 27th. So there's no, I would say, unreasonable expectation that ZAR, and at least USD ZAR and USD CAD, decouple, right? Just put this on your chart. This is a built-in indicator in TradingView. Just put the correlation coefficient on your chart for whatever pair you want, and go ahead and get yourself set up. So then, if you see this thing, let's say, drop below, I don't know, 4.5 here on the chart, 4, then you can say, okay, the correlation is seriously starting to fall away. These things are starting to become uncorrelated. I'm going to go ahead and start trading these things in separate directions. You could do that, but positive correlation is a positive correlation. So if you want to actually do that, where it's like you're shorting USD ZAR and going long USD CAD, you have to have a negative correlation for that. So it's like these little spots here where it's negative. Yeah.
As a beginner, how can I incorporate statistics into my trading? How often should I read articles relating to economic data?
You should read as much as you can, right? I mean, that's what we do.
Whenever
Look how
time, yeah.
much we look at every single day. Like we read the Squawk Chat, reread all these reports, all these outlooks. I mean, you know what
Also,
I was reading earlier
yeah.
today was let me see if I can pull it up.
While you pull it up, at least every week, on the weekend, as even that, but also every week, as you don't have to, but we as Outlooks is posted every Friday. I think they come out Thursday, Friday. So you have the whole weekend to do that, and then throughout the week there is market wraps. There is by ING, by Forex Live, by Westpac. All of them has like daily updates, so you can do those daily updates as a minimum, and every week and every week. But generally on economic data, um, so you should be aware of what's about to come, what is the expectations in the market, and what does that lead the market. What would a likely market do with that type of data? So, and also you can see today we have CPI, dollars falling, also dollars rising right now. So that is kind of a thing that you have to be prepared for earlier this week, so that you don't miss out if you want to set up yourself like you usually can, like Sunday at least. So it's all about preparation. It's not necessarily anything about like, oh, if you don't do anything now, you will never do anything. But you have to set yourself up for success for the future. Today is already gone. There's no trades left today. But set yourself up success for the future, and always prepare for the future and plan for the future. Then that is so if you can only do something today, then it's better than nothing. But yeah.
Are you looking at what I'm looking at?
Yeah, I'm trying to look at what you look at. Yeah, it's Westpac strategy views on yen, Aussie, pound, euro,
Yeah, look
give or
at all
take. Yeah.
these guys here. Head of FM strategy, head of rate strategy, head of FX strategy, head of credit strategy, FX strategist, senior market strategist, head of ABS strategy, head of New Zealand market strategy, credit strategist, rates strategist. These are people who are professionals. And they come together every single week to generate this report. And this report is free. Yeah. And look at this. This is giving you FX targets all day, every day. So let's see here. Let's go to the Aussie dollar. So here's their analysis on Aussie. One thing I'll note, because I read these very often, you can typically find the forecast in the last paragraph here. So the forecast here is FOMC meetings often deliver volatility. But when the dust settles, we should see the Aussie dollar at the lower end of recent ranges near 71 cents against the dollar, with risks lower until the global mood brightens. And they did release an outlook earlier forecasting 70.50. So the whole 70 to 71 range, I have that marked up on my chart. I was already sent outlooks covering exactly that. So if we go to Aussie dollar and I turn on the chart drawings, I'll go ahead and I'll put Westpac's forecasts on my chart.
Yeah.
Yeah.
But it
And then
is
that
you don't need
way, when
to.
you read an outlook, you don't have to read it again
Yeah.
to find that out, to find that piece of information. Try and remember less things. Just have stuff given to you.
We just got a random question in the Period Plus Pro. What does the yellow flame represent?
Oh, the yellow, the little fire icon.
Yeah.
That represents an expanded pivot. If I real quick actually go to
My answer is that the current trend is aggressive, like rising or falling.
Yeah, here's actually the latest version of.
More than last period.
Yeah, here's the latest version of Wayne's pivots. This is the development version. So I'm replacing that fire icon with a little explosion. And you can see right here when you, yeah, a boom. Yeah, the icon I usually go and put the boom emoji with. It just represents what's defined as an expanded pivot. So an expanded pivot point, simply put, is when R3 and S3 are above and below the prior R3 and S3. Do you see that kind of clearly, guys? How this week's or this particular month's R3 is above that R3, and this, oh wow, it doesn't even go that far down. Yeah, this S3 is way below that S3. So this session's pivots encompass the prior session's pivots. And that's what creates an expanding or expanded pivot. And that typically means, okay, your targets, your regular pivot point targets are now further than normal. And if you're not expecting additional increased volatility into a session with expanded pivots, you're less likely to actually hit these targets. Look how you didn't hit that target this week. This candle here actually is part of this week here. The first candle here goes into this week. So, yeah. Cool stuff. Big updates for pivots. So that's what the fire icon means. It's going to get updated to a little explosion, and when you hover over it, you can get a little tooltip now. There's some good stuff about this. And then there's a little vice icon that means the opposite. The vice is the same. It just means that you have compressed pivots. So it's just the opposite, right? Your R3 for this current week is less than your R3 from the prior week, and your S3 from this week is greater than your S3 from the prior week. And so that means that this week's pivots are totally encompassed by the prior set's pivots. It's just the reverse. And instead of like with expanded pivots, your targets are harder to reach. With compressed pivots, your targets are easier to reach. So
and maybe overextended even.
Oh yeah, it's a lot easier to go past S2 and R2 with compressed pivots. And I learned that while doing my back tests with pivot probabilities, figuring out why sometimes you'll get really like 20 or 30% of your highs above R2 for certain weeks and certain months. And I'm like, why is that? And that's because sometimes entire months or entire weeks have low volatility given to them more frequently. They're compressed more often than not. And so that can be due to an economic event that's upcoming, and people are halting the amount of trading that they're doing leading into the event, causing volatility to compress. And then when the next week comes around, the event is realized and your volatility just explodes, and then you run past all your pivot point targets. It's a good thing. These little pivot condition icons is what they're called, to just make you aware of how the current pivot point set is relative to the prior set. And there are strategies for these icons, right? With expanded and compressed, but then there's increasing and decreasing. So it's just supposed to be a little, you don't want to have to make your chart look like this all day long just so then you can see, to make these assessments on your own. That's the entire reason why I made these little icons. So then you wouldn't have to make your chart look like this, like like no one wants to look at a chart that looks like this. It's a lot easier to get the same information just from a little dot. on your screen.
Yeah. I think that will. I think that's that. Do you have any last remarks? Any closing remarks? Any hot topics? Any hot things to say?
Other than that little tidbit about unemployment, I have a feeling that we're going to be revisiting that little tidbit on unemployment sometime in the third quarter. There'll probably be some analysts that cry wolf over the next month or two about here going into the third quarter about what the state of unemployment is going to be in the future. So, you know, I'd say try and discount that as much as you can until the actual unemployment data comes in bad.
Have it inside your brain, but don't act on it. Basically.
Well, yeah, it's just a trigger.
Yeah, or be aware of it if it happens. All right. Thank you very much, Joe, for your insight. And yet again, people, thank you guys for being here. CPI came out at 8%, 6.6, I guess.
Yeah, above the forecast.
6.0 of core.
8.6 for the US, I think, right?
Yeah, 8.6 and 6.0 for core. US, that leads to dollar strength. That was part of the outlook that was for this week. I hope you guys are gonna go into this weekend reading reports. I'm gonna go soon into Discord and post a lot of outlooks, so you can read it over the weekend. Enjoy. Until next time, boom. Have a good one.